What's up, guys? Mark Fleetwood here. Welcome back to the Daily Grind Trader. Today, I'm going Clint Eastwood on you. I'm going to talk about the good, the bad, and the ugly. I made an ugly mistake. The chart now looks bad, and we've got a good one to go over, and I'll tell you where the good entry may be. For that being said, guys, stick around. I'm going to go over everything. I'll be right back. All right, guys, the obvious out of the way first. As per usual, I'm not a financial advisor. This is not financial advice. I enjoy doing technical analysis publicly for your entertainment. If you learn something from it, awesome. If you enjoy it, even better. If you do enjoy it, hit the notification bell, hit the subscribe button, like the video, all that good stuff. It helps keep me motivated, helps me to grow the channel. And with that being said, guys, you guys manage your own money and you trade at your own risk. So please remember that. Also, if you like my pictures and my breakout potentials and all that stuff that I post on Twitter, follow me on Twitter. I can do that much more often than I can make a YouTube video. I mean, it's just that much simpler. It's posting a picture as opposed to making a production. So with that being said, let's go into the bad and the ugly. I was looking at sand, and after my last video I was telling you guys that I was looking to find new entries, find new coins to get into, because I felt like there were other ways to either enter a fresh three wave or early on in a three wave where we could get some really nice new potential. I got hasty and I got cocky. This is on a 4-hour time frame. What I'm going to go back to a daily time frame real quick and just kind of show you how I set the chart up initially. And of course, everything's going to be gone. So let me see if I can refresh this and get it set back up. I hate how these trading views on both platforms lose everything. So this was the start of the rise up. This was the peak of the one wave, I believe. And this was the bottom out point of the two. That right on the bottom. So then what we have is our extensions for the three wave. Typically you expect a 1.618 extension. So about $1.60 on this is what you're looking for if you were to try to hold the whole three wave. Now what I was looking for was, on the 4-hour window, I was looking for a potential breakout. I had this nice wedge brewing, coming in from the bottom, had a bottom touch, a top touch, another top touch, and another bottom touch here. And I bought my weakness. My weakness is I love Morningstar patterns. I saw this Morningstar pattern forming. It's forming pretty much right on the 618 line. Actually, no, the 618 is a little bit higher than that. It was about 960. So I bought like 963, 965, somewhere around here. I bought, and I'm like, cool, I'm gonna get this whole range back up to the top, and then when it breaks the top, I'll get the breakout. That is the arrogance that a bull market brings that you have to avoid at all costs. Because what happened, it dipped way down, this long wick, and there was a lot of coins with really bad wicks today. This morning, I guess it was around 8 a.m. and almost everything wicked down really deep. There are lots of them. And I got stop loss because I put my stop loss at 93 cents. So about 3.5% on the stop loss for that. And granted, that's with margin, so it was 35% loss on that buy. Please note, I never buy my full bag. I never go more than 25%. I don't like my debt ratio to be above 60%. And 60% is roughly what 25% of your bag will get you, is a 60% debt ratio. I think I bought in with like 10% on this to kept the debt rate down. So it wasn't 30% of my overall stack loss, but it was 30% of this. The amount allotted to this trade was gone just from one deep wick. And the stop loss was the right move. regardless of how bad it boned me, because it did come back up above it, but it's been stuck here. Like this next 4 hour move, it didn't move. It hasn't moved back into the triangle yet. It hasn't moved back in, or to the wedge. It hasn't moved back into the formation at all. And it could sit down. It could definitely sit down. It could retest this 50% line easily. And on the daily chart, it actually looks like it should. And this is where I need to be more careful and be more diligent. But at this daily chart, the MACD is just starting to turn. It could come down. It could come down easily and come down a good bit more. This could be a completely different pattern that I was thinking. It could be more of a traditional flag where support and resistance are both going down. It could come down and hit this 50% line hard before jamming out. Who knows? The problem is that I bought without confirmation. I bought without a breakout. This is a breakout pattern. This is 100% a breakout pattern. You don't buy the support because breakouts happen both ways. Breakouts happen up and breakouts happen down. So you buy the breakout. You don't try to preemptively do that. It's a move that is just way too arrogant, and it will bite you in the end. So I got bit, but luckily, like I said, I can't trade without a stop loss on margin. So I lost a very minimum amount, and I started looking again. AAVE on Binance, I'll be trading it on KuCoin, but the chart, I prefer charting on Binance better. AAVE is looking really good. Now, it doesn't have a long history on Binance. Actually, it looks like on Binance US it's very new. So I can't go too far left. But what I can say with pretty good certainty is that 720, 721, these are the days that Bitcoin started its upward momentum and started to the one wave. So I'm going to go ahead and say that this is an okay assumption for a one wave. This date and time, was coming down. It's probably a long consolidation, just like Bitcoin had, and pretty much every other alt was consolidating up to about that same point. Between July 15th and 25th is when most coins started to make their upward momentum. So we had what looks like a one wave, an ABC correction on the two wave. Now again, the two wave probably didn't dip down as far as we'd like. Let me see what we have on the retrace. It got between, it's not too bad, between the 38.2 and the 50%, so close to the 50%. So I'm not too upset about that. What we also have is that we're starting a three wave. We haven't broken any levels of, we haven't broken anything yet, but we're starting a three wave. And what I saw on the 4 hour chart was the same wick that took me out on sand would have been a beautiful entry here, because look, we've had this support here on the extension, on the 236 extension, and we can start making this channel the same way that almost everything else is running on the three wave within its channel. And again, it doesn't have to be exact. You're going to kind of adjust this as you go, because it could be, this bottom could be more legitimate bottom of the channel. This top might not be the top. There might be another top that comes up and expands the channel a little bit. But this is a general representation of where the channel is. Now, since I didn't get this support touch, I could buy any of these support touches on the channel and feel pretty good about it. But we know we've got a strong resistance that's been here for multiple touches. I mean, this thing, and it's only right now, it's only about 3% away. So do you want to go in with the biggest potential being that you get that 3% and you come back down? I'm not ready for that yet. I want to see this break. I want to see this break, and I'd probably buy the 38.2 line for a new run up. Now it looks poised to do so. It looks like it's cooled off a little bit. It got back in the 53 on the 4 hour. I'm not sure where when the daily is, but the This is probably not going to be very accurate on the daily because this is showing 57 on the daily, but it could be. It's just there's not a whole lot of range for it to go back, so I don't know if that messes up accuracy. The MACD looks like it wants to flip back up. It definitely looks like it's flipping back up on the MACD. So this could be a good buy. It could be a good buy very soon, or even right now. But on margin, I want to wait to make sure I don't have another dip right behind my buy. So I'm going to look for a breakout of this line of resistance at 425. And I'm going to look for a breakout of 38.2. If we get 430 and break the 38.2 and retest the 38.2 line, I'm going to wait. I'm going to try to get this gem up because there's more room. So here, there's 3%. If I get the 38.2 line and get to the top of the channel, here's 8.89%, and that's an 88.9% gain for me on margin from the 38.2 to the top of the channel. Or even here, from the 32 to the top of the channel here, 8%, 8.1. So where is it? 73%. So even if it breaks it early and it gets here and it retests and just jams straight through it, there's a good profit to be made there. The profit margin is much better if I wait for this line than to go before it. And the timing is better. So that being said, guys, that's the good, the bad, the ugly. Mistakes happen, but you catch them and you put contingencies in place. That is what is required for trading. No one's mistake free. The market's going to buck you even when you make the perfect move. Sometimes the perfect move still gets bucked because the market just breaks the trend. Who knows? Contingencies must be in place. And with that being said, guys, until the next time, peace.